SPYs were strong again yesterday. First move was up above 238. We held 238.35 the rest of the day. End of the day, put in the high, almost at 239. Some selling right at the close, drift down to pretty much the support area in the after hours, and holding it in the pre-market. So buyers really in complete control. A slight short-term change would be if it started to hold below yesterday's lead morning and afternoon support and pre-market support. Let's call it 238.30. 238.30 gives way, then you have 237.90. The up move started yesterday morning, and then below that is 237.35, so about a buck below the support right here. On the upside, obviously the 240 level where we topped out at the beginning of March. IWM gave us some levels yesterday. I actually shorted some in the pre-market right at this 45-cent level from yesterday. So you can't see really that well on the 30-minute chart, but the 140.40 is there's a lot of action here. After we put in the high initially, we came back down, went through it, made a lower high, and then we held it before trying to run up at the end of the day. IWM, if you look at it on the longer term, it's more extended than the SPYs, so it'll be a little bit more difficult to kind of break through this area, but still obviously extremely strong. So you can see we popped up here earlier into the 40s. We came right back down, I guess, to 15 cents or so. I guess the way I'd look at this is 140.30 to 140.50 is potential resistance, and then above that, 140.80. I'm going to see this trend from around 136 or so. If it fails up here and then you see it holding below 140, play a move back down to the low 139s. Okay, Twitter. So Twitter for the last couple of years has always been a fade on the large pop. In the pre-market, well, let's look at the daily. The way to play something like this coming to earnings, there's no point in saying this after the earnings. So it's gapping up to above 16, 16 to 16 and a half. It's kind of the spot where you would look to see if it can hold or close above that area, or at least close in that area. Right now, twice it failed at 16 and a half, and then the most recent time it spiked up to the 30s, because that's where I shorted some. I would think that it wouldn't trade below 15 today. That if it pulls in somewhere to 15 to 15 and a half. The revenue numbers were awful, but the business is stabilized and it's growing in all regions. They need to figure out how to monetize the larger user base now. If they can do that with the return of the growth, then the stock will probably work its way back up to 18 to 20. Which is kind of a natural high, unless this was from a few companies who might be interested in buying them. But beyond someone looking at buying them, you really have a 19 to 20 top here, going back to the beginning of 2016. And you've had us bottom in the 14 area a bunch of times. The first time here in February, market hours, it had gapped down to 13 in the after hours. And it held 14 again here. And then recently, it dropped. It was holding 14.20 for a few days. It dropped it, but closed back above. People bought it into earnings. They were right. Now they're rewarded with a gap to 16. So that's kind of my expectation and how I'm going to trade it based on the prices I just discussed. X, the guidance was horrendous. This is one of those stocks that really took off after Trump got elected. So you can see it gapped up to 25 area. It was up there for a few days. Then it went vertical over the next couple of weeks. Went to 38. And got all the way to 40, which was insane. I think we shorted it somewhere in here. So now back to reality. They said, oh, actually, our numbers aren't that good or not going to be that good going forward unless something changes dramatically. I suppose if an infrastructure bill gets passed and it's down here, and X is down below 25, there could be a trade for it to go back up to 30. I don't know what the timing on the infrastructure talk is for legislation, but you might want to look at some options for that one. About a few months on 30 calls. Maybe sell some 35s against it. All right, so here's your initial reaction down to 28, bottoms 20, right below 25. Pretty nice bounce. I guess an okay bounce to $26. So hard down tick to 40 cents. Wow, this is pretty wild action actually on the 5-minute. It must be on the conference. Yeah, they're on the conference call. So he normally trades 20 million shares, has done over a million in the pre-market. Fails 26, comes down to 40. Somebody's buying here, tries to break to the downside, then quickly reverses. Now it's through there. What did I put on for support? Yeah, I put 25 and 24. So I was thinking flush to 25 at a minimum, see if there's some bids there. It could be one of those where it flushes through 25, goes down 20, 30 cents, and then you kind of see what happens if it pops back up to 25. I do think if it has a deeper pullback from there, closer to 24, it's probably buyable. Anywhere above 25.70, I would look to fade it. So X is coming. My alert just went off. I had an alert for it when it was coming up to 25. So, right. So that's going to be very in play. And then finally, STX, which Bob was calling out some stuff the last couple of days in earnings. They bought it ahead of earnings. They were clearly wrong. Or I should say the numbers weren't actually that bad. So I didn't see anything on guidance. So I'm wondering if it's just a 40% run up since last quarter. So this has got to be last quarter's report here. It was a $37 stock. I got to go back and check my notes on this. I thought that this seemed like too big a gap, and a big run up that day to 46.60, and then came off. I'm pretty sure I lost some money short this actually, shorting it at like 45 or something. Went to 46.60, came all the way back down to 42, and then it trended here. So, but this is around 40% from where it gapped. And so even with the down move right now to $46. You're still, around 30% above where it was from the last quarter's gap. So in these situations where a stock just runs up this much, they're probably looking for deep guidance. So that's probably the deal there. At 45 and a half, 46, and if it fails there, it could get ugly. I got the 45.60 in the pre-market. You can't get above 46.60. So let's key off of those two areas. It comes down to pretty good volume here. I'm having trouble getting above this 46.50. I would think if it actually breaks through there, you can play it for a move back up to at least 47 and a half. Yeah, Rob, I will take a look at the 4.3. Okay, so they beat by 10%. Up 30, revenue up 32% year over year. Not guiding up that much. Only guiding up like 1.5% on the revenue side, and they're guiding up 5% on the EPS side. I guess my first inclination is based on, I mean, it's a good consolidation, I'll give it that, but I'm just not seeing anything in the guidance to justify, yeah, it's up 7%, not 10%, right? So people naturally will key off this whole number here at 80, whole number divisible by 10, so I would just keep an eye on 80 and see what it does from there. It normally trades 1.5 million shares, so you should get 3 to 5 million shares today, so it should be decent volume. Great. Just awful. For some reason, I talk about it every quarter, even though I don't really trade it that much anymore. People like to trade it, though. It's for whatever reason. I think last quarter was pretty good, right? It gapped out to 26 and came off $1.50. Actually, that's not last quarter. This is last quarter. It went up to above 30 and they crushed it. So right now it is 22.5. So it's below this support. It's kind of in this. When I looked at it, there was nothing really that clear. I guess 23 I had as potential resistance because of this failure area here when it came down to 21. That's what I would keep an eye on. I don't really want to spend much time on it. Next one is McDonald's. So let this be just a reminder. If something has no resistance levels and it starts trending higher, you want to try to stay with it. We talked about this in the review after the close yesterday. And always on the open, if you can, get a little bit into a quick dropout, like in this case, it dropped out to this pre-market support. You can get the bigger dropout that we would have really loved, but you got to drop out to pre-market support, immediately went up, consolidated at the high, and then broke to the upside. It was a long, pretty much the rest of the day, maybe a little bit of stopped out here. For today, you could see some profit taking now that people have had a chance to digest this big move. 140, 140.50, this area here. Could trade in this range from there to here. The next one's Cat. Also had a bid all day. Strong. 103 to 102.50. This is an interesting area here where it's accumulated before the final move in the afternoon. As I said in yesterday's notes, 106.50 is the net resistance on the daily. ESRX, the bigger trades were in the after hours and pre-market right on the open. Pretty good bounce. Accumulated the rest of the day in the 59 area. Closed strong. Up again this morning. I think this just happened. My inclination is if it's makes another higher low, 59.5 or 60, to continue to trade it on the long side. Yeah, and then Netflix obviously is strong stock, just like McDonald's and the other two I just mentioned. Broke out from 48.5, 49, went up $4, $5, and you have this 151.5 support from this big up leg here to look at. If it failed there, 150 would be the next natural support. Be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.